The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, the big news tonight I posted into the Tiger Den today is the Japanese market down 5.4%. That breaks the low that we made 3.5 weeks ago. Frankly, what happened was the market in the Nikkei made a beautiful ABCD pattern. We featured that in the newsletter last week. And since that time, the market has just literally melted down. We're starting to see that all across the board. I mean, it's just one thing after another as the market seems to be cascading down. Now, I wanted to talk a little bit about the Super Bowl. If you'll remember, last week I had Norm Winsky on, and he gave a synopsis of what the Super Bowl was going to do based on an astrological basis of the times when those companies, which the Denver Broncos is a corporation, as are the Carolina Panthers, is based on their birth charts. And he described what was going to happen to in the Super Bowl. And I don't know if you folks followed it or not, but his analysis was 100% spot on. I mean, he didn't miss a trick. It was it was really amazing what he's done. He's done some pretty good things, but this was really amazing. It had nothing to do with the markets. I have to tell you another story about the astrological part of some of this stuff. Several years ago, my good friend Jim Twentyman called me up and said that he had a good friend down in Costa Rica that was he was a part of the Wave 59 group, which very, very smart traders. And this guy was into astrology really big, and he wanted to make a bet on the Kentucky Derby based on the birth chart of the horse. And Twentyman said, "Can I make the bet?" I said, "Well, I'll just call Las Vegas." I said, "We can put the money down, no problem." And Jim says, "I want to bet 100 myself." And I dropped the phone. I said, "Twentyman," I said, "you wouldn't bet on the replay of the crucifixion." I said, "Why are you betting?" He said, "I don't know." He said, "This guy's pretty good." And he really feels adamant about it. And he said, $100 is not going to change my style of living. So I go on and I check. A horse is 25-1 in the morning line. And so I said, okay, we're going to do it. So I did it for myself. And I did it for the fellow in Costa Rica, and I did it for Twentyman. And sure enough, the horse goes and wins the Kentucky Derby and paid, oh my God, it paid $59, which means that Twentyman got back we got $2,900 back for a $100 bet. And as the last one I won, I think that was the Derby in 1836. But actually, it was Thunder Gulch in 1997, I believe. But after that, the guy passed away down in Costa Rica, and so we never got any more from it. But it was all based on the birth charts of this stuff. Whether that works or not, I don't know. One other factor that we want to keep in mind is, if you'll remember, Norm Winsky of Astro Trends told us that at 10:15 tonight, there's going to be a very negative aspect hitting the birth chart of the stock market. I believe that's what he said. It was I know maybe it was a transit. It was a transit of Saturn and Pluto that had a high degree of negativity to it. Now, Shane Smulyan of wolftrader.net has also been commenting about these negative speeds that we have in the planet. So this is one of the reasons why we're coming down, as much as we are. Now, the first chart that I've posted here shows the Nikkei breaking. It doesn't show the last price because we've broken below 16,000 now in the Nikkei Dow. That breaks that ABCD pattern. The ABC pattern finished perfectly back on January the 20th. We had that 3-week rally, and now we've went down and broken below it again. And remember, they're open over there because they don't do a Chinese New Year. Well, because it's Japanese. Anyway, hold on. I wanted to show you the you'd have to be a rocket scientist to figure that one out. You'll see here that we have a situation now where we're breaking lower now in the Chinese market, and you'll see that little ABCD pattern also that is there, and then you'll be watching it pretty good. Okay. You know, these people in the den here are rather funny. One person said they're reading tea leaves and they're getting the same information that Norm is getting. Well, folks, all I'm doing is reporting. You know, whether this stuff works or not, I don't know. But like Obi-Wan Kenobi said, you have to be prepared for everything. That's for sure. Anyway, this is what we want to be watching today, because when we finally open in China, which will be later, I think it's maybe even Monday, there's going to be a gap, either up or down. And well, that's really telling, isn't it? But if this market's really hit badly, it's going to be to the downside, and that means we could be going down, a lot more. Now, I wanted to show you, this is something we talked about on Monday about what we think is happening, and that is the fact that we've had this bottom form around the 20th of January, right near a Bradley date, and then we rallied up into that February 8th new moon, which was the I haven't put the prices in for today yet because I had a little bit of an internet problem, but now we're starting to head down. We're already below 16,000 in the Dow, and it appears we're going to be a lot lower yet this morning, so we want to watch that. Okay, now I had a question in the room about something that's someone sent me on an email from the Tiger TV folks, and that is the MACD. This is a chart going back quite a ways, about 20 years, and I'm going to put it in here and let you folks take a look at it, because I'll tell you what I know about MACDs. Okay, this shows you that long-term pattern that we're looking at. That's the 1, 2, 3, 4, 5 expanding triangle. But what this is showing you is the fact that how the MACD had been diverging and giving signals to the downside of when this was happening, and this is another indication of what's going on. MACD is the moving average convergence divergence. It was a oscillator developed by Gerald Appel out of New York many years ago, and it has a great deal of popularity. And of course, oscillators are basically made on moving averages, and they are lagging indicators, but they can be very, very helpful. So that's one of the things that we wanted to talk about today, the fact that this is also telling you where we are. Okay, we're going to take a little break here, and we'll get back, and I wanted to say something more about some stocks in Europe.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to post a chart in for the Treasury bonds. I want to talk a little bit about the foreign banks, especially Germany, because Deutsche Bank just went under, well, it's trading at 13.22 right now. And as you've been listening to our show here, this has a price objective somewhere between 9 and 5. And I don't believe the German government is going to allow Deutsche Bank to go the way of Lehman Brothers, but one never knows in these days. The chart that we're looking at now is the Treasury bonds going back almost a year. It's 10 months up here. And last night we took out the 167 level. That was the high that we made way back in April. That completes this big ABCD that we've had since July. Folks, I want you to stop and think just a little bit about what's really going on here. You know, if you go back and think about what Bernard Baruch said in his autobiography, My Own Story, that don't be concerned on the return on your money, be concerned on the return of your money. And this is what's being fed to these folks, in my opinion, because, you know, they're trying to, you know, get interest rates, some interest rate, whether it's 1.5 or 1%, or in the case of, you know, of Japan now, they have negative interest rates. It's happened before there, but these have not worked. Quantitative easing has not worked. And so, you know, someday there's going to be a reckoning, and I don't know when that's going to come. Now, part of the problem that we're having in the markets is this credit problem that we have going on, because there's been so much of the free credit based on corporate bonds, junk bonds, and also treasuries, that this is going to come home to roost sometime. And so this is where the real problem lies in the market. It's not really the stock market. The stock market's, you know, taking the brunt of it, but that's pretty much, you know, what we're looking at. When you get stocks like, you know, really a good stock like Amazon, even though it sells for what, 300 to 1 earnings or something like that, but, you know, everybody uses it. Everybody uses Google. You know, they just were inflated to incredibly high prices due to, you know, buybacks or whatever. You know, who knows? But this is what we're going through right now. Now, we did have we're in this zone for the new moon which is the Chinese New Year. So we should have some support in the stock market somewhere between, yesterday we thought the support would come in at 1825, 1829 in the S&P. We got down to 1824 and we rallied about 35 points. And now we're going back down again, testing what's going to, see what's going to happen at that point. Now, whether we're going to have negative interest rates here in the United States or not, I don't know. All I do know that this is going to end, very, very badly. That's the bottom line. Oh, by the way, we're going to have a special guest on Friday, Mr. Arch Crawford, Samuel Arrington Hicks Crawford of Crawford Perspectives, another astro guy, will be on the tube here with us at 9:30 in the morning on Friday, and I'm hoping to get Bill Meridian back next week, because Bill has had offered us some great cycle input of what was going on here, and I would like to get him back as also. But we've been fortunate to have some really sharp guests on recently, along with Norm Winsky and Adrian Tilgaray and Stan Harley and William Koval. I mean, it's been fun to have these folks on because they add a lot to it. And these are experienced folks. These are guys that have been around for 4 or 5 decades, and that's where you get some of your stuff. The old Chinese adage is the smart man learns from his mistakes, but the wise man learns from the mistakes of others. And that's what you really, really try to do when you're doing this. Now, I've had a request to talk a little bit about crude oil. And what I've done is I'm going to use the work of my good friend Jim Bartolione of V50 Partners, and I wanted to show you the chart that he's got using the let's put it this way. It's a continuation chart, 2-hour continuation chart on crude oil. What this does is it allows you to look at the market when they roll over from one contract to another. It makes that variance in there to look at it. So as you can see, this crude oil chart, has a really nice ABCD pattern here. You'll notice the C leg again went exactly to the 786 retracement. You'll notice the beautiful ABCD pattern, at point X. When we were making the actual low on the market, and then we rallied about 25% in crude oil. We went from 26 and change all the way up to 34, and now we're coming back testing one more time. Now the gasoline futures have made lower lows, as has the heating oil, so there's not any divergence happening. So this is still heading to the downside. So we want to keep that in mind. There's going to be some good swings, and Goldman Sachs came out with a report today, and they always tell what's going on because they are never wrong in their reports. And one time they were, when oil was 140, they said it was going to go to 200, and that was the top of the market. And we'll see what's happening. I'm also going to have Rich Anderson on. I'm going to try to have Rich on tomorrow, but Rich is traveling right now, and he winters in Florida. And so as soon as I get him in a local spot where he's got a landline, I'll have Rich on. I talk to him all the time, so I will get that. Now, the grains have sold off again, which is to be expected. We thought we'd have one more move down in the grains, and we're beginning to get that. So this is an ideal situation set up. Someone's asked a question, during the Great Depression, what happened to the grain markets? We had some of the greatest bull markets in grains during the Depression that we'd ever had, and that was mainly because of the Dust Bowl. There was huge droughts, and you see pictures of it, of how bad it really was. But that's really how bad it was. It was so bad in the upper Midwest that peaches and plums and apples that were on the trees were exploding. because the temperature was so hot. And those were just one of the things. Of course, you know about the erosion of the soil, but all that stuff has been changed because of the rotation of crops and the better irrigation and stuff that they have going on. But we'll get Rich on and we'll talk about the grains. There's no hurry on that because the real emphasis now is what's going on in the stock market, because we're having this tremendous amount of selling, which is to be expected. You know, this is a bear market, folks. It's been a bear market since May 19th, and it looks like we're in the midst of some more. And that doesn't mean, you know, if it went up, remember, any market that can give you 4,000 or 5,000 points in the Dow can take it away from you. So keep in mind that that's, you know, pretty much, you know, what you're looking at here. So that's the main thing. Okay, we'll be right back. And 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, we're back, and we've had a request to talk about silver. You know, silver has been moving up along with gold. We hit $1,200 an ounce in gold yesterday. We hit it again today, just a little while ago. No, we didn't. We hit 1197. We just missed it. So we'll just keep an eye on it. But the silver's still lagging badly. Still, silver should be trading up around 1750 per ounce based on where gold is, if you look at the respective highs of where we were before. So there's been a big move in the gold market. I listened to John Logan, and frankly, our leader, Tom O'Brien, has kept you folks in the gold market. I was bullish around 1070, but unfortunately I got out around that 1130 level, and the last $70 has been one of those times where you look and say, what Mark Douglas used to say, you're in a move and you miss the move. So what do you want to do? But it's better to be out of a market wishing you were in than in a market wishing you were out. And if you wanted a perfect example of that is if you would take a look at the price. Oh, don't tell me I'm frozen again. Oh dear. Yeah, my screen just froze. It's just to take a look. I don't know. I am going to be able to do it. Hold on. Let's take a look at the price of Facebook. This is where it was just a few days ago. And as you can see here, we backed off well over 15% in Facebook in just a matter of a few days. You'll notice that the line that you'll see there, that green line, well, that's a Twentyman line. It's interesting that Jim Twentyman, who's studied the WD Gann for a year while he was at Drexel, we gave him a sabbatical and paid for his study because we wanted to find out, what was in that. This was one of the things that he found by drawing these 45-degree lines. He occasionally would notice that they would hit this particular level where it would spin off of, and what you need is 2 points on the line. And then they connect out into the future to, look at something that would be very, very, very interesting. So we'll see what's going to happen. Now, also, we're looking at Goldman Sachs now is don't tell me we got a problem. Oh, Houston, we have a oh boy, that's not good. I've lost my connection, but that's okay. We can still do the things that we like to do in here. Oh dear, when it starts acting crazy, it's always a little difficult. We had a very, very weird question came up, and I don't know how to answer this, but I've been doing this for a long time, and the question was, have you had any bad experiences over the years? Hey, I've been doing this since '59, and if you think I haven't had some bad experiences, you're being really naive. This question related to with other people, and of course, when you deal with other people, you're going to run into a few squirrels out there. And honest to God, folks, and all the people that I've dealt with through all the years, I can count on one hand the number of instances that I would say, yeah, I'm very uncomfortable about that one. But none of them were anything that were life-threatening or too much emotional or something like that. Some of them had some emotion behind it, but nothing other than a good story. There was really, nothing to tell. That's the bottom line of what we're looking at here. So my alert on about a market hitting a certain price. Unfortunately, what's happening is I'm not able to see what prices are doing, and so that's really what I'm watching at. So we'll see what's going on in here. But going back to the bad things that have happened, over the years, we'll tell you the worst. I had a man from down south, a nice fellow, came out to spend a day with me. I trained him to be a trader. He was doing really well. We had such an enjoyable time that he spent 3 or 4 more days with me here in Tucson. And the reason was he told me the most horrific story that I'd ever heard in my life. He and his wife and 2 sons were snowmobiling up in Minnesota. They went up there to play in the snow, and the 2 young boys were going ahead as young boys do. They were 14 and 15, and the problem was there was a terrible accident ahead of them. And when they got there, the one son had hit a wire from a fence and was decapitated. And boy, when he said that, I can't imagine a parent going through something like that. Well, we became very good friends over the next couple of years, and I was actually trading his account, and I was doing really well. I was up about 45% a year, just trading bonds and S&P. And he said he wanted to move some of his money into a more aggressive. And another one of my students who was doing well became friends with him, and he started trading the account for him. I had no idea where the account was traded, how much it was, or anything. Well, what happened was there was a $36,000 loss, which was absolutely nothing at all. I mean, he had a Ferrari, so I mean, it was no amount of money. He blamed me for that $36,000, and I said, "You got to be kidding me!" I said, "I didn't even know that where the thing was being traded." Anyway, he never spoke to me again, and that was it. So anyway, that's what happened. Okay, here's what we have going on. The market's weak. Now, whether the market is going to hold in this area right here is going to be very, very interesting, because we do have this negative aspect that comes in at 10:15 tonight, and since Norm has been really spot on with these, you have to pay pretty good attention to it. And again, we have to add the work of Shane Smullian of wolftrader.net, and then we add the Bradley model to that. It looks like we are going to be, going lower. So we hope that you protected yourself against some of these positions. Now, they asked me about other things and what's going to happen with bonds. All I do is look at the patterns, folks. And this is a big ABCD in the bonds. And, sometimes they work and sometimes they don't. That's, basically the bottom line of what we're looking at. I wish you could hear my frustration index, because all I can hear is this darn beeping sound with this limit going off, and there's not a darn thing I can do about it. So what I'm going to have to do now is to pick up and try to reboot this thing at the break and see if I can get that thing fixed. However, I wanted to mention the price at Deutsche Bank. They came out today with a reassurance to people, and the stock is down another 5%. It's trading at, last time I checked, it was trading at 13.22. The large ABCD on that measures down to about $5, somewhere between $9 a share and $5 a share, and $5 a share looks like it's more apropos than anything else. So that's the main thing that we're looking at. The last price I got now is at 13.20, and so we'll see if that's going to be the case. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber
as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I wanted to post a chart of Goldman Sachs in here because we have a ABCD long-term going back the last 6 months that measured into this 149 level, and we've gapped down about 2.5% here in Goldman Sachs today to be coming in at the 145 level. That's right near where we were yesterday, near yesterday's low. So if this doesn't hold, this is going to be, well, it's already melted down quite a bit. But what's interesting about this Goldman Sachs is if you'll notice, back on November 2nd, we gapped up, as you can see, and then it stopped exactly at the 61% retracement at 199, and now we're trading at 145. And you can see how far we are, down on the year from last year. You can imagine, the people that were a little disappointed, owning that as they were with Apple and a few others. But that's neither here nor there. But this should be a good spot where we should get some holding for let's just say, for some good support. It's just an ABCD pattern, and as you know, they can expand down, they can go down, a lot farther, much like we did. If you remember, we looked at Amazon the same way. Amazon should have stopped right around the 485 level, and 489 level, and we went another $15 or $17 below that one also. The real problem that we have going on, folks, is going to be the next chart that I've put up so many times, and we're going to break below that here possibly very, very soon. If we do, boy, we're in really big trouble, because then we're already in trouble. The question is how soon it's going to be. You'll notice here that we have this is that same pattern that we looked at when we had the MACD pattern, only we don't have the MACD. We just have the 1, 2, 3, 4, 5 expanding triangle pattern, and this is why it's so very bearish, and why we've been talking about it. And it's not just me, our guests have been very, very bearish. We had Shane Smolian on, and I don't think anybody could have laid it out better than what he did. And it certainly looked like we've turned over there. We had Bill Meridian on. The interesting one is we had Bill Koval on yesterday, and Bill said that we should be be near a major bottom here. Now, we did have a 35-point rally in the S&P yesterday, and we'll see if if that's going to hold. I can't get prices right now, so I don't know if the S&P has held that 1820 level. I doubt that it has, because there should be there's going to be ups and downs on this thing. It's not going to be a straight down move. And if we do have a crash scenario, the only two times that it's going to happen, based on astrology, one would be tonight, and the second one would be right around May. That would be May 30th, the end of the month. That's the one that really is really looks really tough. So we'll see if what's going to happen, with this, and we'll move on to that level. Okay, now one other question that someone's asked in the den, and that is about the emerging markets. You'll see that the markets have actually rallied. The S&P's trading at 1846. Wow, last time I saw it, it was 1834, so that's a good sign. We'll see if that's going to be the case. I'd like to see this bottom come in, and then we'll see what type of a rally we can get from this level. That's pretty much the bottom line of what I'm looking for. But we're still pretty much, down in the move area to see that. Basil was kind enough to send me where the prices were, and Basil, I thought you typed in the wrong numbers, because I thought it was a lot weaker, because I haven't had prices for 15 minutes. So I appreciate that. All right, now let's just assume that this bottom that we have here with the new moon is going to be in, and we're going to get a little bit of a rally. We'll see if that's going to be the case or not. No matter what, the folks here at TFNN do their very best to give you some good information, so we want to keep that coming down the road. We're going to have some other guests come in. I've got some other guests that I'm scheduling. I'm trying to get Larry Williams to get some time for us, and also Mark Leibowitz of Volume Reversal, and we'll see how that is going to work out, and will be really good to see that. And I also have a good friend that might come on, and that's Ben Stein. I met Ben many years ago. I traded his account in Forex, and I did really well with him for several years, and he got bored with trading, so he might come on as a guest, which would be fun. Boy, you talk about one smart guy. Boy, he's smart, and he should be, because his dad was Herb Stein, who was a Nobel Prize economist. So we'll see what's going to go on in here. Okay, now. Oh, we're going to have a break coming up already. Holy cow. It's going to be really interesting here. One other question that someone had, I'm going to try to pull up the chart on it. Oh, and that is the Japanese yen currency. And let me give you a quick eyeball here of what we're doing here in the Japanese yen currency, because we've almost made, we're within about 150 pips of this target that we've been looking at here in this area here of around the 113, 112 area in that. So someone's asked a question about Ben Stein. Ben Stein, the money that we made, it wasn't a lot of money. Well, to some people it was over $50,000. He donated it. He donated all the money to the ASACP, whatever that thing is with animals. He's really big into that, and that's what he did. So he's a pretty nice guy. He lives out in Malibu, but we'll see if we can get him on. Anyway, we'll go on to the next one here. I wish I could turn this beeper off, but I can't. All I hear in the background is just beep 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 beep, and I don't know what it is. Can someone give me the last price on Twitter by any chance? Would you be so kind as to give me the last price on Twitter, because we have a potential major bottom in Twitter here, and I know the whole world is against this stock right now, but we'll just get up and take a look at it, because right around this 114 and change level, it's going to be really interesting. I don't know if it went below 115 yesterday, but that's where the area where it completes all these things. So we'll see if that's going to be the case or not. But that's not what's going. Boy, that's spot on. Wow, that's very good. Okay, good. All right, so it got down to 1453. Thanks, Basil. I appreciate that. Basil and I have a lot in common. He lives in Boston, and I went to MIT. I went to MIT for lunch. That's all I did. I just went there for lunch. My daughter had gone to Harvard, so I went over to meet some friends. But boy, there's some smart people over there. Holy cow. All right, let's look at the IWM. We've had a question about that. That's the small caps. This is the one that should have been rallying, the January effect. We're going to take a little break here, and then we will finish up the show.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, and someone's brought to my attention that Martin Armstrong from Martin Armstrong Economics also has a turn coming this week, and as we all know, Martin is one smart cookie, so we'll see if that's going to happen. How much of a turn it's going to be, no one knows, and sometimes we're wrong, sometimes we're right. We'll have to wait and see. But this lunar cycle that we have here with the new moon, and it's also, this is very strong, a very strong point from Chinese from the Chinese point of view, because they have the elements they look at. They have the 5 elements. That's earth, fire, water, wood, and one other one, I think metal. Gold is the other one. They relate to the 5 planets that you can see in the morning sky real early in the morning. If you look at the new moon out there, behind it you'll see the bright stars. You'll be able to see Venus, Mercury, Mars, Jupiter, and Saturn. You'll be able to see those in the night sky. So that's how that's related. So it's a cycle phenomenon. Whether it's going to be much or not, we'll wait and see. But we should have a bottom in the market, if not yesterday, maybe soon, and we'll see if that's going to be the case. But we'll wait and see, what happens with that. That's primarily what we're looking at here. Remember, folks, long term, this thing is flat out bearish. I mean, it is just as bad as it gets. That doesn't mean you can't get hellacious rallies, and this could be one of those. So just be careful, and hopefully we'll get some nice patterns here, down the road. The dollar's, weakening pretty badly. We're getting actually euro get up to that 113 level, which is a big retracement ABCD pattern, on the longer term charts, and we shouldn't get much above 113 in the euro if in fact this is good, because at least to the downside, because that should be major resistance, up into that area. We'll wait and see. As far as the gold, we exceeded the oh, that's it. Well,
if you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.